Good morning. We'll solve now problem 3.7, page 76. It's about the free cash flow. We'll start by reading the problem, then the questions, then answering. Biley's Corporation's financial statements, dollars and shares are in millions are provided here. On the next page, we have the balance sheet as of December 31 for 2 years, 2008 and 2007. Assets, total current assets. Net plant and equipment, here we have to pay attention for this account. It is given at its net value, which means plant and equipment minus accumulated depreciation, or it can be presented as net fixed assets. Total current assets plus net fixed assets or net plant and equipment equal total assets. Liabilities side, we have current liabilities, accounts payable, notes payable, and accruals, total current liabilities. Long-term debt, total debt, and the stockholders' equity section. Below it, we have the income statement for the year 2008 only. Okay, sales minus operating costs excluding depreciation and amortization gives EBITDA minus depreciation and amortization gives EBIT, or we call it operating income, minus interest, it gives us EBT or the taxable income, minus taxes, tax rate is 40%, it gives us the net income. The dividend paid is given $11,175. We'll solve two parts. Part A, what was the net working capital for 2007 and 2008? And part B, what was Biley's 2008 free cash flow? So first of all, we'll compute in part A net working capital for 2007 and 2008. Refer to the formula on your books, page 59. Net working capital equal current assets minus current liabilities except notes payable. So, current assets in the balance sheet, total current assets for 2008 is $72,125. Current liabilities, we have accounts payable, notes payable, and accruals, except notes payable, so we'll only have accounts payable plus accruals. Okay, so it's equal, in other words, net working capital equal current assets minus accounts payable plus accruals. To start with the year 2008, current assets, as we said, 72,125 minus accounts payable 10,800 plus accruals 7,600, and the answer is $53,725. As for the year 2007, for 2007, current assets is 59,000, total current assets. Accounts payable 9,000, accruals 6,000. So it's equal to 59,000 minus 9,000 plus 6,000 and the answer is $44,000. This is part A. Part B, it's required to compute the free cash flow for the year 2008. So, free cash flow for 2008. Its formula is EBIT, or the operating income, into 1 minus tax rate plus depreciation and amortization minus capital expenditure, here we need to compute it, plus change in net working capital. Also, we need to compute this variable. So as we said, EBIT, it's called operating income. We get it from the income statement. T is the tax rate. DA is the depreciation. And amortization. We still need to compute capital expenditure and change in net working capital. So, capital expenditure equal change in gross fixed assets. So, change means the difference for the current year minus the previous year, and fixed assets given in this example is only plant and equipment. However, the gross amount is not given. The given amount is the net amount. So we have to make some additional calculations. To go back to the initial formula, it is plant and equipment for 2008 minus plant and equipment for 2007 in its gross amount, which is not given. As we said, we have, as we said, the net plant and equipment, so it's equal to net plant and equipment 2008 minus net plant and equipment 2007, add depreciation and amortization. So whenever we have only the net amounts, we have to use this formula. Equal net plant and equipment 2008 50,000 minus 47,000 plus depreciation and amortization is 5,000. So capital expenditure is equal to $8,000. The last amount in this equation is the change in net working capital. So last item, change in net working capital, it's equal to net working capital 2008 minus net working capital 2007 computed in part A. Net working capital 2008 is 53,725 and net working capital 2007 is 44,000. So it's equal to 53,725 minus 44,000, and the answer is $9,725. Now substitute the amounts in the formula of the free cash flow. So implies that free cash flow for 2008 equal EBIT from the income statement given 39,000 into 1 minus tax rate T given 40% or 0.4 plus DA, depreciation and amortization, given 5,000 minus capital expenditure computed here 8,000 plus change in net working capital also computed here 9,725, and the answer is $10,675, and sure the numbers are in millions. Thank you very much.